Preliminary numbers show Nebraska farmland values decreasing in 2018. UNL's Department of Ag Economics has released this year's findings in the annual Farm Real Estate Report, and that tracks overall land values as well as cash rental rates. Nebraska Extension educator Jim Jansen is one of the survey's authors and stopped by to talk about the most recent data.
The Nebraska Farm Real Estate Survey, along with the reports that come out, preliminary estimates comes out the second Wednesday in March each year. The final report comes out in June. It's an annual survey of the land industry professionals across the state of Nebraska. These include agricultural appraisers, certified general appraisers, farm and ranch management companies, as well as real estate brokers across the state. As part of this report, in the preliminary estimates, the two major things that we will be publishing include preliminary estimates on land values as well as cash rents. We divide the state of Nebraska into 8 major regions and provide averages as well as ranges for the averages on the cash rents. And we follow the major types of land and the major types of cash rental rates that commonly are negotiated, or you could follow the statistics related to the prices on.
And in last year's survey, each of those 8 regions you talked about saw a decrease in farmland values, about 3% on average from the prior year. Are we seeing similar trends this time around?
Yeah, so the percent change or the decline in the market value, some of the regions were more or less than 3%, but the main point being, on average across the state of Nebraska, the average market value of Nebraska farm real estate has roughly declined, and it's continued a gradual decline since the peak of about 3% compared to the prior year.
And does that decrease come mainly from cropland, land for livestock, a little bit of both? What's the breakdown?
Breakdown across Nebraska, we've seen a little bit higher decline in the land classes that serve the cow-calf industry. So this would be either grazing land or hayland, and followed by dry land, cropland, and a fairly marginal decline in our irrigated land classes. So that would be either center pivot or gravity irrigated cropland.
And what bearing does this have on crop and cattle prices?
You know, the better way to take a look at it, the value that we have related to an asset, whether it's a car, piece of equipment, or agricultural land, rental properties, whatever it might be, the value of what we're producing relates to the value of what we have. The value of what we had is going to be influenced by the bids that go on related to cash rent, market value of land, whatever it might be. It's going to be influenced by the value of those commodities. Continued declines or continued margins related to the pressure of budgets and some of these things, as long as we continue to see that pressure, we might see further declines in the future. The big thing being, we're seeing a gradual decline. Anytime we see a gradual change in the asset value or a gradual change in general economic forces, obviously it's tough for many operators and landowners across the state, but it's in my view, might be a little bit more favorable than some of the extremes we've seen in history, and some of those extremes were in the 1980s. Mm-hmm. So gradual declines that reflect the overwhelming market forces, land values, cash rents, declining commodity prices or lower commodity prices, those eventually get reflected into the value of those assets.
Any other significant changes across the 8 regions that stuck out to you?
In addition to the land values, we also follow cash rents. In the cash rents, we've seen a gradual decline across the majority of the regions. There were certain regions, and if the viewers would like to take a look at our publication, you can see the actual changes. But generally speaking, cash rents for cropland are down, as well as grazing land on a per acre basis. Cow-calf pair rental rates were a little bit more mixed. And when I say mixed, we had a change or a rate of decline. There were a few areas they were up, and there were a few areas they were down. What was noted by the survey participants relate to the factors of if the landowners are willing to provide a degree of care, meaning in essence, are they almost taking the cattle in, or are they willing to take care of things such as fencing, weed control, guarantee a water source during the grazing period, things of that nature would relate to care.
And what are some other concerns from landowners that were addressed in the report?
Sure. So the land industry professionals that take the survey have firsthand knowledge of engaging with landowners, tenants, whoever it might be. It might be related to land purchases, cash rent negotiations. If you maybe are a banker, you have a line of credit, you're obviously aware of where the money's going. So these folks are fairly well in tune with what's happening. That being said, Two of the biggest concerns, we have a simple scale from 1 to 5, 1 being negative, 5 being positive, 3 being neutral. We asked about 20 different economic forces influencing land values. And leading into 2019, the two most negative factors, and these are preliminary, so they might change, but the two most negative things we see noted were current property tax levels and the outlook for future property tax policies, which are obviously a major concern for many folks across the state. That was one thing that stood out more so than almost anything else in the survey, was relating to those two forces.